The Anti-Wall Street Strategy, Uncovering Trend Following. Okay, let's dive right into this explainer of our source material today, where we're unpacking a trading method that practically ignores everything you've ever been taught about finance. No daily news cycle, no complex forecasting, just a completely different, almost rebellious approach to the market.
So, what if buy low, sell high is actually terrible advice? I know, it's the golden rule, right? But trading coach and NLP modeler Charles Faulkner poses a really fascinating question that kind of forces a pivot. Think about it. What do you do right now when your chosen market is sitting at an all-time high or an all-time low? If you're totally married to the idea of buying low and selling high, you just freeze. And what happens? You miss out on the massive runs.
And that brings us to this really stark contrast between conventional wisdom, which is all about buying low and selling high, and what we're calling the anti-Wall Street strategy, which relies on trend following in both bull and bear markets. Conventional wisdom demands that you predict the future, which, let's be honest, usually just leads to a ton of anxiety. But the anti-Wall Street reality? It's delivered extraordinary profits for over 30 years. You aren't trying to predict anything, you're literally just riding the momentum. To really understand the mechanics here, we're pulling our insights straight from Michael Covel's definitive book on the subject. It's a real game changer. In fact, Legg Mason's chief market strategist, Richard E. Cripps, noted that this specific work has this rare, lasting appeal because it strips away all the fluffy theory and documents how trend following actually operates out there in the wild. So, what exactly is trend following? It's an underground trading strategy used by the biggest moneymakers to consistently profit in both up and down markets. But there is a deep paradox here, honestly. It's engineered to consistently profit no matter which way the market is moving, yet despite being the engine behind some absolutely massive institutional returns, it remains almost entirely underground to the everyday retail public. It just runs so contrary to typical Wall Street forecasting that it's buried under a mountain of unfounded myths. Shattering those unfounded myths is exactly what this material is all about. So how does Covel do it? Well, he relies on objective facts. First off, he uses hard performance data from professional managers to replace pure theory. Second, he strips all the market noise down to a single essential metric, the market price itself. The text also digs into classic case studies of global market scandals to show exactly who profited and how, while featuring profiles of the actual legends who use these strategies, guys like Bill Dunn, John W. Henry, and Keith Campbell.
Pinpointing targets of opportunity. Distilling this highly complex world down, Covel frames the actual execution through three fundamental steps. Number 1, what to trade. Number 2, when to trade it. And number 3, which is absolutely crucial for risk management, how much to trade. When you answer those three specific questions with strict trend-based rules, you completely eliminate the guesswork.
Now the social proof. What do the legends actually say? Because you don't just have to take the book's word for it. In the world of finance, social proof is pretty much everything. So let's look at the consensus from the people who are out there actively moving the markets.
First up, we've got Ed Seykota, a pioneering trend follower and one of the original market wizards. His review of Covel's book is just a single, undeniable word: essential. When someone who has historically generated absolutely staggering returns using this exact methodology calls the breakdown essential, you know it carries some serious weight.
Then we have Dr. Van K. Tharp, who points out that understanding why this works is just as critical as the how. He says, I think the book did a superb job of covering the philosophy and thinking behind trend following. You might call it the market wizards of trend following. He recognizes that the whole strategy is heavily rooted in investment psychology and tight risk management.
And check this out. Portfolio manager Jonathan Hoenig makes an incredibly bold claim. He says it will replace market wizards as the must-read Bible for a new generation of traders. That's huge. It acts as this perfect bridge, taking secretive, highly aggressive technical strategies and breaking the mechanics down so they are actually accessible to the everyday investor. The market price tells you all you need to know. Ultimately, the whole philosophy boils down to that one sentence. It is the foundational takeaway of everything we're discussing today. You don't need to stress over earnings calls, you don't need to decipher complex economic policy, and you definitely don't need to watch those screaming pundits on TV. All of that data, the whole shebang, is already baked into the price. If it's trending up, you buy. If it's trending down, you sell short. You literally just follow the trend until it bends.
To wrap things up, I want to leave you with this final provocative thought from John Ehlers, president of Mesa Software. He notes, Michael Covel reveals the real secret about trading, that there is no secret. Just think about how much time and energy is wasted out there searching for some magic algorithm or whispered inside tip. The reality? True market success is disciplined, structured, and hiding right there in plain sight. So I have to ask you, are your own investing strategies relying a little too heavily on non-existent market secrets? Maybe it's time to just follow the trend.